July proving to be a hot month for stocks as all major indices are seeing major gains. Although at the start of earnings season, Thomson Reuters is predicting second quarter earnings per share will decline. Yes, again. This time 4.7% from a year ago. Here to weigh in on all this, Charles Payne, Stephen Rosilio, and Chris Versace. Good to see you guys. Charles, first to you. Records for Wall Street, but then we have what a lot of people still call an earnings recession. How do you square the two?
Well, there are quite a few things. I mean, this still might end up being like the sixth best earnings period in history. Then there's a strong dollar. And then some people talk about the flight to safety / quality. I thought the last guest with Liz was absolutely amazing. If you're worried about something being a bubble, consider that this market is being led by utilities. Imagine that. I've never seen this before. This deep into a year.
Is that search for yields? Is that what that's all about?
But it's not just search for yields. They're up 20%. I mean, the S&P utility,
wow.
That's mind-boggling stuff. So, I continue to say, continue to invest in these large, great American companies, or sometimes not great American companies. That ARM Holdings deal, think about this. SoftBank paid a 67% premium from the Brexit low on that stock. That's a UK stock that got crushed. Why? Because they believe it's going to be great 10, 20, 30 years from now.
Well, Chris, let's weave politics in a little bit here. Some people are talking about a Trump rally. Could that be a factor here?
I think it could be. I think we're going to learn a lot about where Trump is going to take things this week and see what some of the policies are. Hopefully we get a little bit of unity. It doesn't sound like that might be the case, at least as the convention starts off. But, I think aside from the convention, without a doubt, it's going to be earnings. We've got nearly 100 S&P 500 companies coming on tap this week. So, we're going to find out whether or not the index is going to deliver 13% earnings growth in the back half of the year.
We got breaking news from Netflix. They are out with their second quarter results. Lori, how do they look?
Yeah, this is a disaster. Shares down something like 13%. We're going through the numbers right now, but here's the problem. Netflix is reporting international streaming additions of 1.52 million when the company's own forecast was for 2 million. Subscriber growth is what it's all about for this company. It's been a rocky road for shares, down something like 13% year to date. The implied volatility out of the options market warned us of this. They have a lot of new competition, companies like Hulu, for instance. So the subscriber growth is really starting to fade here, and it's a big problem, as we can see right here for Netflix. Guys,
Chris, let's start with you on that. Chris, we have heard about the slowing in growth in subscriptions. This is the worst possible outcome for what they were hoping for.
Yeah, absolutely. And there really is a 1-2. It's slower subscription growth, and you've got other companies, like we just heard, everybody from Hulu to Amazon, even Apple, that are starting to come out with original content. So I do think it's going to be a much more competitive environment. But, longer term, I think after everything settles out, Amazon could be one of the names that is left standing, just given the content base that it has.
Okay.
So for me, on a pullback, it might be something interesting long term.
Charles, how do you miss your own estimate on that international subscriber growth? There were people out there that thought they were sandbagging on that number, that number wasn't that big. And then they come out, they were supposed to beat 2 million and 1.52. Whoa.
Yeah, you know what? They probably were sandbagging. And that's why this stock is going to get hammered pretty good, already is. So, this is in a class of its own. You guys know this. This is one of these really high-flying names that you throw away all your valuation metrics. And we've seen this, by the way, before. I think that's why Chris talked about maybe buying in on weakness. I've seen the stock get crushed. I was actually in it and sold it a week or so ago. The next day, someone upgraded it. I was like, golly, I feel great now.
Good for you.
I tell you, what I'm rolling the dice on right now is IBM, which has missed every quarter for the last 4,000 years. I'm actually in that one at 150. I think that's going to be the surprise to the upside.
You are a wild man, Chris. When you say that you're looking at it for the long run, the problem with this company in the long run is that they add subscribers. They've reinvented themselves, which is amazing. But now they're making this very expensive original content, which brings a lot of people on board. But even with the price increase, I have Netflix. I don't pay that much for it every month. I don't see long-term how they can possibly add enough people to make up for how much they're spending.
Well, you have to remember, they had this huge push on the international side, and that's the growth story, right? So we're fairly mature here in the U.S. It all hinges on international. Right. And the other thing they have to do is really start ramping down those expenses. That's the only way that they're going to go from something like 24 cents in earnings this year to north of $1. So they need to have that perfect combination. And, heading into the quarter, they were probably priced to perfection.
Yeah, Charles, he says that the growth story is outside the U.S. That's absolutely true. But the U.S. customers are the ones that really provide the profit. They're the ones that are, the high-margin users, where they can get the most money out of them. You look at it, this is the 4th consecutive quarter of slowing growth here in the U.S. If they saturate that market, they're going to have to really jack prices further.
Yeah, one word is China. I mean, the bottom line, you know what, China will be the difference maker, and if this stock gets another big leg to the upside, it will be for that brief window of opportunity where they beat everyone else to the punch in China, and that will be brief because, ultimately everyone will be there and be competitive, but they could actually get the jump there. Again, we know this is a very high-flying, very volatile stock. It's not for the faint of heart. I would hope anyone in it understood the risk going into the close.
So, Charles, I mean, would you get back in now? You said that you were in, you got out, and then it got upgraded. Now it's getting hammered. What do you think? No,
I'm gonna let the dust settle on that a little bit. You know what? This big SoftBank deal has me reinterested more so in Internet of Things. I was early in some of those names, and they didn't live up to the hype. But I think, you know what? Watching this deal, watching that huge premium, that's what I'm kind of looking again. But what I love are things associated with housing. I think that's going to be the sweet spot in the second half of the year. Whirlpool, I'm doing great in. Mohawk is one everyone I think should take a look at. MHK.
Chris, I mean, where are you on this stock? What do you think?
I'm going to wait and see where it settles out and could probably recalc my numbers just to see what the risk to reward is. But, there are like Charles is saying, there are other companies out there, and one of the best performers thus far, and I think it's going to be a fantastic performer to the back half of the year, is going to be Amazon. And even where it is, it's still, roughly a PEG ratio of right around 1. So, a lot of upside to go there. Google's looking good. So many other, as they say, fishes in the sea.
Charles, excuse me. Netflix has a revenue problem. They've missed revenue estimates for the past 4 quarters. Now it's 5 quarters in a row. Isn't this emblematic of what's happening in the country? We have these high stock valuations, but they keep missing on the revenue front.
Revenue fronts have been tough. You're right. Over the last 2 years, I think that's been a big key. Again, though, some of that we can argue is the strong dollar. There's a reason why Smucker's has been a great stock of late. Church & Dwight, which makes Arm & Hammer baking soda. Clorox. These domestically based companies that actually benefit from a strong dollar with a strong stronger U.S. consumer. The contrarian argument, of course, is the larger multinationals are getting hurt by it. So that's a problem. And also pricing power, David. You're right. You know what? Only right now, in the last, I would say, 5 weeks, am I seeing signs of potential wage pressure to the upside. And so retailers, businesses, they've been tough to be able to raise their prices. They might be able to later on in the year.